It's time now for a look at the markets on this Friday and a wrap-up of the action this week. And for that, we have on the line Dr. Seiwan, Professor of Economics at Ewha Womans University. Thanks for coming on today, Dr. Kim.
Good afternoon.
So we had an impressive winning streak on the KOSPI over the past few weeks, but not quite an all-time record since the markets did finally take a breather yesterday. Take us through what happened this week in Korean stocks.
Well, as a whole, this week's stock market was not as good as last week, with the end of 14 straight day rise. In the case of KOSPI, Friday index decreased by almost 1.2% compared to Monday's index. I think Bank of Korea provided negative news in the equity market with a decreased GDP forecast from 2.6% to 2.5%. So that led institutional investors and foreign investors to more sell stocks.
Got it. Well, yeah, as you say, the Bank of Korea news coming out there deciding to keep interest rates steady at 1.75%. Now, that was widely expected, but then the BOK also lowered its GDP growth forecast to just 2.5%. What was behind those decisions, and what do they mean to investors?
Actually, Bank of Korea's interest decision, which is not changing interest rate at 1.75%, is already reflected in the market a long time ago. So it did not give impact on the equity market. But as we talked about, Bank of Korea's decreased forecast of GDP growth gave I think, huge impact on the market, because the decreased forecast of the GDP growth came out of additional 6 trillion won government expenditures and other government's expansionary policies.
Right. Well, now changing the topic a little bit, the U.S. released its beige book on Thursday, and that gives an outlook of fairly subdued growth going forward. The Fed is also holding steady on interest rates. What do you see in this data?
Oh, well, according to recently released the beige book of the United States Federal Reserve, I think the signals on current status of U.S. economy is mixed. In the case of U.S. inflation and employment, the number shows the situation is okay. But in the case of consumer sales, it has been declined over 1%. So we believe that U.S. Federal Reserve will be maintaining pretty neutral position on interest rate. That means they are giving a signal of not changing interest rate for a while until the end of summer.
Yeah, we had been talking for weeks and weeks about interest rates rising, but it seems that's been called off. Now, viewers should also know U.S. markets are closed on Friday, New York time, for Good Friday. But Dr. Kim, we'll have to leave it there this afternoon. Thanks for your time today.
Thank you very much.